Hello, this is Vance, and this is Friday, February the 8th, 2013. And I'm going to do something a little bit different today. First of all, I'm going to stop. This is kind of like a CL journal of mine, and it's CL Trades. But this is really kind of like a chart lesson. I'm going to do a chart lesson today. That's what I'm going to call this. And the reason I'm going to do this is because it occurred to me that a lot of times I talk about on my journal, when I talk about setups on the 800 tick chart, I often refer to second entries on a lower time frame, or if you looked at a lower time frame chart, or you would see it more clearly than what it appears on the 800 tick. And the reason I'm doing this is because there's a trade this morning right at the open that appeared to be somewhat confusing to. It seems to be confusing, and I'll point that out. It's right here on the 800 tick. I took a trade right at 96.11. Okay, that's not that price. They're about that price right in here, and I took a long, and there was a reason for it. There's a couple of reasons for it. I thought it's a second entry long off of here. Like, price makes a first, comes back, and this is a second entry long. I won't get into. It's more like a structure trade, but. Why would I take it? Why does this look like just complete overlap? Or what is the problem with this? Well, dojis like this one are going to be double bottoms or double tops, and anything like that, that's typically the way I look at it on 800 tick. So what I've done is that I'm going to take a look at a couple of the trades where the 400 tick is more clear as far as where the entry should be as opposed to the 800 tick. Now, I only use the 800 tick chart. Don't get me wrong, that's all I use for trading. I don't use the 400 tick for confirmation. I just strictly use the 800 tick chart to enter and exit my trades. But what I did here is I pulled up a 400 tick chart just to show you what I'm talking about. Because what I'm going to talk about, I'm going to show you right physically what I'm talking about verbally, I guess. That's the best way I can describe it. Now, I looked at this trade right here as a breakout pullback. Okay. Now remember, the adage is that the market does, if it fails to do something twice, it'll typically do the opposite. Now, this trade came off the bottom. It was a strong up. I see it. The first attempted to go down. The first time it failed. Came down to the second time it failed. Immediate failure, and this was the place to go long. Now, I went in long fairly early because I thought it was more of a breakout pullback. So I thought maybe this was the first failure, and this is more the second failure. But let's take a look at the 400 tick chart. If you look at the 400 tick chart, and let me just see if I can now use If you look at this, we look at the price making this high here. This is the first. If it comes down, it attempts to come down the first time. It attempts to come down the second time. It fails. And so this is like price tried to come down twice, and this is the immediate failure. That's why. So you look at the 400 tick chart. That looks like a much more clear setup to go long than this chart here. Okay, that's the 800 tick. But to me, they're one and the same. Now, let's take a look at another trade like that. There's another one, especially at the top of the channel. So let's take a look at the top of this channel. In this particular case, we see you see the top of the channel. It looks like, why would this be a short? I mean, I'm short right underneath this bar right here. Okay. Well, to me, price comes up. Now the structure is we came up into this area. Now, first of all, I should back up a bit. In this case, I've looked at if this is the opening right here, and this is where price really started to move. This is a first leg up. We have a pullback. Second leg up. So I'm thinking that there's going to be an area of an exhaustion. Okay, so that's the first thing that I'm considering in the back of my mind. But more importantly, when you take a look at this, let's take a look at these bars right here. It appears that price has attempted to go on the first time it's failed, second time it failed, and this almost like a second entry long. And it does look like that kind of a setup, but it failed. Okay, it came up here and it failed. So if you went long here, I mean, you can't be 100% all the time. If you went long here and you saw this and the price came back down, I would be very tempted to close up this trade because I'm looking at this as an exhausted area. However, if you still stuck with it and you stuck with your 15 tick stop, then it did eventually work out. But these overlapping bars, these dojis, they're really of a concern. Now, when price got to this level, this is a very strong bull bar, and it looks like that, well, maybe this is a continuation pattern. But when you look at this bar right here, this is rejection and possibly a trap. So going short right here, when keeping your stop right here, is really an A trade. All right, that's my way of thinking. Now, look at, here's a doji here, and this closed on its high, and this, well, let's take a look at the 400 tick chart and see what we can see on that one. What does the 400 tick chart look like? The same area. As you can see, we have a lot more overlap on the 400 tick. Price comes up here. This is the first. It comes back up to this level. You can see this double bottom. Comes also starts to come up here as well. So you can see there's a lot more overlap with these long tails. These long tails really represent congestion or capitulation. Typically, that's what they look at, and you can see it. Now, this looks like less of a range area in this because of these long stems. But remember, the long stems that I've talked about are double. See the different colors that you have here: run up, run down, run up, down. Now, at this level, we see price going up, and you can see this long stem here really is a strong bear bar. Even though it's just a stem, it goes up and it comes back down. So this is it double tops here. Look at that. This is a double top. This is a double top on a 400 tick chart. Going short right here, okay, keeping your stop above here was the right trade, because despite the fact that we had this move up here, your entry price would have been somewhere in the neighborhood of 96.48. Okay, notice this. Price comes down. It attempts to go up the first time, fails. Attempts to go up the second time, fails, and you go short 96.48. Look at on this chart. It looks like it's gone up. It fails, and right here it goes up again, fails. The entry price is, if you entered right under here, the price is 96.48. Same price, except on a different chart. Okay, so that's another way to look at it. This is a 400 tick. Okay, and we'll do one more. Again, what kind of pattern does this look like? It looks like price has come up. This is what I look at it. Price has come up. It's failed the first time. Attempt to go the second time. Immediate failure. Looks like a short to me. Okay, this is a pretty good short pattern. Let's take a look at what it looks on here. On the 400 tick, notice this is really a second entry short right here. Price attempted to go up the first time. It failed. Attempted to go up the second time. Immediate failure. And look at this, that rundown. Okay. Well, let's do one more. Look at this pattern. When price comes down here, this is on the 800 tick. Notice this. Would this be a reversal pattern? Well, on the 400 tick, look how clear this is. Price attempts to go down the first time. It fails there. Second time, double bottom, going long here. Second entry long, off to the races. You know, this doesn't look like that kind of pattern, but on a shorter time frame, it's much clearer. Those are the things you have to keep in mind. Look at this. Look at the stem here. The stem here, even though this is a stem, it comes up, and these are bars that are going down. Look what it looks like on this chart. You can see this. This is a first failure, come back. Second failure. Okay, first attempt to go up, fails. Second time to go up, fails. Okay, because of these long stems. Because if you put this on a shorter time frame still, you would see the double tops here. You see, that's what, and so that's why I just use the 800 tick. I hope that's, there are many other examples of this. And so that constitutes the, just an example of how a lower time frame chart can be, if you are aware of, the time frame or a shorter time frame, how many of the setups that seem on the 800 tick not to be there, how much more clear they are on a 400 tick chart. Now, I'm not saying that you use a 400 tick chart side by side with the 800 tick. You might, but I don't find it's necessary. I want to see everything on the 800 tick because of the familiarity with it. One chart, one indicator. That's one instrument. That's the thing. If I want to, that's what I look at. So I hope that's clear to you. I'm going to call this the chart lesson. So I'm going to call the slow hand method price action chart lesson for today. If you have any questions, please let me know. Bye for now.